You know what's crazy? Most people think they've already missed the big crypto wave. They look at Bitcoin sitting above tens of thousands of dollars and think, man, I wish I was early. But what they don't realize is the real opportunity hasn't even started yet. Because while the world's attention is still on Bitcoin's price action, the next explosive bull run will be driven by altcoins. And if you position yourself early enough, this could be the biggest wealth shift of the decade. Let's break down what's really happening. The signals that almost no one's paying attention to, and how some of the smartest investors on the planet are quietly setting themselves up right now. So, here's the truth. Every single major crypto bull cycle starts with Bitcoin dominance. Bitcoin moves first. It drags the entire market out of fear and into greed. But then, once Bitcoin starts to slow down, liquidity flows into altcoins. That's the moment when life-changing gains are made. It's the stage where 5 times, 10 times, even 50 times returns start showing up. Not in Bitcoin, but in the altcoins that follow. Now, let's look at the signals. On-chain data from Glassnode and Santiment is showing a pattern that's eerily similar to the 2020 to 2021 setup. Active addresses are climbing, new wallets are forming, and the stablecoin inflow into exchanges has been increasing steadily, which usually signals that investors are preparing to re-enter. At the same time, Bitcoin dominance is peaking. And historically, when dominance hits high levels, it's the prelude to an altcoin rotation, meaning Bitcoin leads, but altcoins outperform every single time. Here's where it gets even more interesting. The altcoin narratives that are forming right now aren't random. They're being driven by real-world utility, by new technological cycles, and by institutional adoption. Let's talk about some of the biggest themes that could define the next altcoin bull run. First, AI and crypto integration. Tokens like Fetch AI, SingularityNet, and Ocean Protocol are bridging artificial intelligence with blockchain data systems. And as AI continues to dominate tech conversations globally, projects that sit at the intersection of AI plus crypto are going to explode in relevance. Second, DeFi 2.0. The first DeFi wave in 2020 was all about yield farming and governance tokens. It was messy, chaotic, and unsustainable. But the next phase is being built around real revenue, institutional-grade liquidity, and Layer 2 scaling solutions. Projects like Aave, Synthetics, and Curve are quietly rebuilding their models to support long-term growth and compliance. Then we have Layer 1 ecosystems, Ethereum, Solana, Avalanche, and even emerging players like Sui and Aptos. Each of these networks is competing to host the next generation of decentralized apps. And when competition heats up, it's not just innovation that increases, it's token demand. And don't sleep on real-world assets, RWA, the tokenization of everything from real estate to government bonds. BlackRock, Franklin Templeton, and JP Morgan are all testing tokenized products. That's not speculation, that's actual institutional validation. So when these big firms move, liquidity follows. And liquidity is what drives market cycles. Now, let's get brutally honest. 90% of people are going to miss this altcoin rotation because they'll wait until it's already obvious. They'll see coins exploding 300%. Then they'll jump in, and by then, smart money will already be exiting. You don't want to be the late investor chasing green candles. You want to be the one buying when no one's watching. Right now, the market is still in the accumulation phase. Fear dominates sentiment. News outlets are quiet. Influencers aren't hyping. And that's the exact environment where millionaires are made. Think about it. In 2020, if you'd bought Ethereum under $200, Solana under $2, or Cardano under 10 cents, you would have seen returns that traditional finance can't even imagine. And today, we're in a very similar setup. The key? Focus on utility, not hype. Look for projects that have actual use cases, active developer ecosystems, sustainable tokenomics, partnerships with real institutions. Because when the market shifts from speculation to utility, those are the projects that skyrocket. Here's what's already happening beneath the surface. Venture capital firms like a 16Z, Paradigm, and Sequoia Capital are increasing crypto investments again after a long, quiet period. They're backing infrastructure projects, the kind that doesn't make headlines now but becomes the foundation of the next bull run. At the same time, global regulations are starting to mature. The US and EU are establishing clearer frameworks, which means institutional players, the big funds, the family offices, the pension investors, are getting more comfortable stepping in. Once that door opens, liquidity floods into the altcoin market faster than anyone expects. But here's something few people talk about: the psychology of market cycles. Every crypto bull run follows the same emotional rhythm: disbelief, optimism, euphoria, and denial. We're currently somewhere between disbelief and early optimism. People still don't fully believe that crypto can recover, but they're starting to get curious again. That curiosity is what precedes FOMO. And once FOMO hits, altcoins will go parabolic. Let's talk about positioning. If you've got a portfolio, here's a professional way to structure it. Keep your base in Bitcoin and Ethereum, your foundation, but allocate 20 to 30% toward mid-cap and small-cap altcoins that have asymmetric upside. These are projects with solid fundamentals but still undervalued compared to their all-time highs. A few examples that analysts and on-chain experts are currently watching include Solana, because of its developer comeback and NFT ecosystem; Chainlink, because of its Oracle dominance in RWA tokenization; Arbitrum and Optimism, because of their role in Ethereum scaling; Injective Protocol and GMX, because of decentralized trading; and even sleeper picks like Render and Akash, both tied to decentralized AI and compute. The point isn't to buy everything, it's to understand the trends before they go mainstream. Now, if you want to get even more advanced, track wallet flows. Platforms like Nansen, Arkham, and DeBank show you where smart money is moving. When top wallets start accumulating a token quietly over weeks, that's your early signal. You'll always know before the headlines hit. And look at developer activity, GitHub commits, active contributors, partnerships. All of it gives you a sense of which projects are alive and building. Remember, hype dies, but code never lies. One more factor: liquidity cycles. When central banks around the world start easing monetary policy, risk assets rally. Crypto is the ultimate risk asset. We're entering a period where interest rates might stabilize or even start declining. And that's when altcoins thrive. It's the same macro trigger that ignited the 2020 run. Cheap liquidity pushes investors out of cash and into assets that promise high returns. So, the next bull run? It's not a question of if. It's a question of when. And the when might be a lot sooner than people think. Because every signal, from on-chain metrics to VC activity to developer growth, is flashing the same thing: accumulation, not capitulation. And when that flips, everything changes. So, if you're watching this, don't just sit there waiting for a headline that says altcoin season has started. Because by the time the news tells you, it's already over. The opportunity is now in the quiet phase, when no one believes, when prices are flat, and when conviction pays. Crypto rewards patience and preparation. If you do your homework now, position early, and hold through noise, the next bull run could completely change your financial future. Remember, markets move in silence, but wealth is made in those silent moves. So maybe the question isn't, will altcoins pump again? Maybe it's, will you be ready when they do? Because when this rotation starts, and it will start, those who prepared will look like geniuses, while everyone else will be asking how they missed it. Again,